Now that summer's coming to a close, where is the Omaha real estate market as we move into fall? That's the subject of today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. Let's look at the current inventory. Currently in Douglas and Sarpy County, we have 1,566 homes on the active market. This is up 11% from 2022. When you remove new construction, it shows that we only have 730 homes on the active market in Douglas and Sarpy County. Existing inventory is up 15.5% compared to 2022. How does our current inventory compare to the years pre-pandemic? If you look at the pre-pandemic years, for example, 2017 to 2019, we are still well below those years in terms of inventory. Back then, we were still considered a very low inventory market. And even if you look further back, 10 years ago, in 2013 and 2014, we had over 3,000 homes on the market. Let's take out new construction and just look at the existing inventory over the past 10 years. And you can see, same thing, very low inventory when you compare the years pre-pandemic. What about home prices? Last month, the median closed sales price in Douglas and Sarpy County was $308,000. This is up 4.4% compared to August of 2022. What about the median sale price for new construction? In August of 2023, the median closed sales price in Douglas and Sarpy County for new construction was $450,070, and this is up only 1.7% compared to 2022. How about existing? The median closed sales price for an existing home in Douglas and Sarpy County was $290,000. This is up 5.5% compared to 2022. Why does the sale price of existing homes continue to rise while new construction appears to be slowing down? It boils down to two items. One, existing homeowners who have a low interest rate who do not want to sell and then buy a home at a significantly higher interest rate. Number two is affordability. Many people simply can't afford to buy a home at the current interest rates. Let's say you own a home, and let's say you want to move because you have a growing family. You should really give some thought about keeping your current home as a rental property. And let's look at the math. Let's say you bought a home back in 2019, and let's say you paid $190,000 for it. Let's say your taxes are about $4,200 a year, and your insurance is about $2,400 a year. Now, you had a purchase price of $190,000. You came in with, let's say, just say 10% down payment, so that would be $19,000. The amount financed for 30 years, and let's say you refinanced when rates got down to 3%. So you're financing $171,000. Your monthly principal, interest, taxes, and insurance would be $1,271. Now, keep in mind, there's also going to be mortgage insurance in there as well. Today, that home is worth probably somewhere around $275,000. So you own an asset, it's going up in value, it has a positive cash flow because let's say you can rent it out for $2,200 a month. So there's an argument to not selling and actually keeping it as a rental property. Now, before you make this decision, you want to talk to two people. One, you want to talk to a tax advisor, and two, you want to talk to a lender. I think it's important to keep all of your options on the table. There's definitely pros and cons to being a landlord. It's a great way to build wealth, but don't let anybody fool you. It takes a lot of work. There's risk involved, there's a lot of liability, and it's a heavily regulated industry. You really want to make sure you understand exactly what you're getting into. Speaking of affordability, where are interest rates? The interest rate for a 30-year fixed rate mortgage is currently at 7.33%. That means if you're buying a $400,000 home, your monthly payment would be, and let's do the math, you'd come in with a purchase price of $400,000. You come in with a 10% down payment. The amount financed for 30 years at 7.33% would be $360,000, and your monthly payment and this is just principal and interest, would be $2,475.40. Now, this does not include property taxes. And remember, property taxes in Nebraska are high, doesn't include homeowners insurance, and it doesn't include mortgage insurance because you're coming in with less than 20% down payment. The affordability is really taking a toll on buyers who would like to purchase a home, and this has artificially suppressed demand. If rates go down, those buyers are going to come back into the market. That will continue to push prices higher. So if you think prices have to come down, you might be in for a rude awakening. And here's why. Number one, Omaha is a growing community. It is becoming much more attractive to a much younger crowd. For example, you want to check out the new riverfront development downtown. It's really amazing what they got going on. Two is a great quality of life, and this is attractive to businesses. Jobs are great for a real estate market. And number three is our affordability. And you want to look at Omaha and compare that to other markets. You get a lot more bang for your buck here in Omaha than you do in some of the other major cities without some of those other quality of life issues that you have going on in some of those larger cities. Let's talk about closed sales. As we move into fall, sales drop. This is called seasonality. Let's look at seasonality over the past 5 years. The number of closed deals peaks in the summer, then it drops off in the fall, bottoms out in the winter, and then ramps back up in the spring. In August, we had a total of 953 closed sales, which is down 19.1% compared to 2022. Again, this is a market where only people who can afford to buy and those that are experiencing a significant life event like a job transfer. Now, speaking of job transfer, if you're looking to transfer to Omaha and you need assistance, my contact information is in the description below. What about days on market? The average days on market in Douglas and Sarpy County is currently at 17 days on the market. If you're a seller, you need to understand that we're no longer in a market where you receive 25 offers and the buyers are waiving inspections and waiving appraisals. It's still a seller's market. However, in the upper price ranges above $500,000, it is a neutral market. A reminder, 0 to 3 months of inventory is a seller's market, 4 to 6 months of inventory is a neutral market, and 6 months or more is a buyer's market. And I get this question, should I wait for prices to drop? Now, there's nothing to say that prices are going to drop. Could they drop a tad? Sure. Every real estate market is going to be local. And I was in an event sponsored by the Omaha Area Board of Realtors, and they were talking about the Omaha market and the Omaha economy. And they pointed out that Omaha is short 35,000 housing units. The other question I get is, should I wait for interest rates to drop? Now, if they drop, then all of those buyers sitting on the sidelines, they're coming back into the market. And if you increase demand, prices are going to shoot up. But if you buy now and if rates drop, then you can refinance later. Now, the key is, can you afford the payment now? Don't bet that rates will come down because rates are going to go up and down, but you don't know when. And if we've learned anything in the past couple of years is nobody knows what the future holds. Are we headed into a recession? Now, we could be. However, different parts of the country handle recessions differently. How is the Omaha job market? In Douglas County, we currently have an unemployment rate of 2.6% compared to 3% last year. In Sarpy County, we currently have an unemployment rate of 2.1% compared to 2.4% in 2022. Both Douglas and Sarpy County, we are well below the national unemployment rate of 3.8%. Could unemployment rate inch up a bit? Sure, but does that mean we're heading for a crash? No. Now, if a major employer were to relocate, or if there was a significant increase in unemployment across the board, then that could hurt the housing market.